Monarch Networth Capital Institutional Equity Desk has initiated coverage on Fiem Industries. Before we talk about this compelling investment idea, let us take you through MNCL's rigorous fundamental research process, which forms the DNA of its reports. MNCL's Institutional Equity Desk is committed to set new benchmarks in providing path-breaking and completely independent research service on under-researched and undervalued high-quality mid-cap stocks with an aim to add value to all stakeholders. The DNA of the equity team is to do differentiated research continuously and consistently by analyzing data from multiple sources, undertaking channel checks, and interacting with several stakeholders. The focus is on showcasing research work on companies with strong business models, which are yet small in size but have long runway of growth, and also have large gap between price and value, which could result in superior returns for investors. With its DNA defined after rigorous brainstorming by its highly skilled, richly experienced and motivated analysts, MNCL has set its vision to being the most respected research house in the mid-cap space. This report is a result of MNCL's research philosophy and aims to showcase new insights with solid investment rationale on a 600 crore rupees small-cap auto ancillary named Fiem Industries. Why Monarch is covering Fiem? MNCL's coverage of Fiem is driven by several standout features packed in a unique yet small auto ancillary company. The company dominates a consolidated auto lighting industry with high entry barriers and commands almost one-third market share in two-wheeler lighting space. Over the years, Fiem has reported robust top-line growth and best-in-class margins. The company has been outperforming the auto industry growth rate by huge margin for the last 10 years. The company's 10-year sales CAGR is almost double of two-wheeler industry growth rate. Being the largest supplier to marquee two-wheeler manufacturers like Honda Motorcycles and Scooters India, Yamaha India, Suzuki Motorcycle, TVS Motors, Fiem is all set to continue on its strong growth trajectory with the emergence of newer trends like shift towards LED, strong growth profile of its major clients, and new technological tie-ups and joint ventures. Despite this kind of stellar financial performance, we believe that the company is currently trading at mispriced valuation, and that makes it a very compelling proposition for investors. Fiem is trading at just approximately 11 trailing 12 months PE, almost 50% discount to its peers' average PE. As compared to its own 5-year and 10-year average PE, Fiem is trading at almost 52% and 39% discounts respectively, and hence limits any downside risk from here. With expected better performance in the future, the investors will be rewarded through both earnings growth as well as valuation multiple expansion, and hence Fiem can generate huge wealth for investors. What is Fiem all about? Fiem Industries is one of the leading Indian manufacturers of automotive lighting and signaling equipment and rear view mirrors, which is largely focused on two-wheeler industry with Honda Motorcycle and Scooter India and TVS Motor as major clients. Promoted by an industry veteran Mr. J.K. Jain in 1989, today the company is the largest player in the Indian two-wheeler to lighting market. Investment rationale. Fiem boasts of 3 world-class R&D design centers located in India, Italy and Japan, having more than 120 engineers and designers in designing, optical simulation and engineering facilities for development of the automotive lamps and other components as per Indian and global standards. Despite having no technological alliance, driven by superior R&D capabilities and excellent relationship with Japanese OEMs in India, Fiem has also started exports to advanced markets like Japan. Fiem has a strong client base of around 50 industry-leading two-wheeler and four-wheeler OEMs. However, it derives major part of its revenues from two-wheeler OEMs such as HMSI, TVS Motor, Suzuki and Yamaha. A strong growth path of these clients is a big advantage for Fiem. Fiem has more than 10 years of experience in LED auto lighting, which gives it a competitive edge as two-wheeler OEMs accelerate the adoption of LED lights. Fiem's major clients have been aggressive as far as LED adoption is concerned. This will help Fiem maintain its high growth trajectory. Fiem is targeting product diversification in near future and has already done technical collaboration with Toyo Denso Japan for bank angle sensor, a safety component for two-wheelers to be supplied to its existing marquee client HMSI. With BS6 becoming a reality in FY21, Fiem is all set to supply fuel pump module and IC connector to two-wheeler OEMs through its joint venture with Fiem Industries Japan and Toyota Shusho India. The reports highlights how Fiem has fared well on quality of earnings and corporate governance aspects. The company has been paying dividend consistently. Fiem has 64% promoters holding, whereas institutions hold 19%. Valuations look compelling with large gap between price and value. MNCL analysts remain convinced with Fiem's growth strategy and estimate 8% CAGR in revenue and 11% CAGR in earnings over FY19 and FY21, coupled with maintaining ROE profile of auto business at approximately 15%. Considering prevailing challenges in the auto sector, double-digit earnings growth would be a big achievement. Despite having an established name, diversified clientele, diversified product portfolio, strong financial history, Fiem is trading at a very attractive valuations versus its comparable peers. Report undertakes detailed valuation comparison with relevant peers and on a conservative basis assigns 12 PE multiple to FY21 expected earnings from auto business. MNCL initiates coverage with strong positive stance and target price of Rs 620, offering 35% upside in a year. With recovery in the sector, the company is all set for a stellar growth path in medium term, leading to PE multiple expansion and promises stellar returns. Analyst credentials. MNCL's analyst Anubhav Rawat have done extensive research on the company by visiting company's facilities and independent ground research. More detailed information of the company, please connect with the analysts. Disclaimer. Please read the disclaimer carefully before making any investment decision.